Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Morning.
Morning. So we saw Bitcoin shoot up above 40,000, meet some resistance there. Also, a trio of hearings on Capitol Hill yesterday in the news cycle. Lawrence, what's going on with the markets, and quick thoughts on DC policy?
I think a real issue right now going on is a little bit, not so much that, but I think what we're seeing, a couple of things happen. Binance yesterday said, CZ, the CEO, said that only about $2,000 worth of Bitcoin can be withdrawn from accounts that have low KYC, know your customer, basically with low information that they have on their customer. And, that raises the question, why exactly did Binance have these accounts in the first place? Anyway, it went from being able to take out 2,000, let's say a couple of Bitcoin a day, to just $2,000 worth. And also CZ said, the current CEO of Binance, the founder, said that he's looking for a new CEO. So there's kind of this bit of uncertainty and some worries, and it harkens back to what happened with OKX back in October, when customers weren't allowed to withdraw funds because founder Star Shu was, let's say, having a nice visit with authorities in China. And
so you're saying there's a bit of a panic in the market, and perhaps they're buying more Bitcoin because of potential withdrawal problems.
Yeah, the flight to safety, in this case, liquidity is Bitcoin.
And Emily, looking at the hearings from yesterday, did lawmakers answer their own question? One of the panels was called Cryptocurrencies. What are they good for?
Well, there's definitely a few lawmakers that don't think crypto is good for very much, except for sort of shadiness and a lack of decentralization. But I guess the optimistic side of this shows that, crypto is probably here to stay if regulators are taking it so seriously and if they're getting that worked up about it.
Yeah. Well, meanwhile, Senator Elizabeth Warren has asked the U.S. Securities and Exchange Commission to answer several questions by today related to their oversight over crypto exchanges and what Congress needs to do, if anything, to fill in any regulatory gaps. Joining us now to discuss is SEC Commissioner Hester Peirce. Welcome to the show, Commissioner. So Senator Warren asked SEC Chair Gary Gensler to outline the scope of the SEC's authority over crypto exchanges by today. Can you, by any chance, offer a preview?
Well, I can't. Good morning. It's great to be here. The chair responds to those letters on his own, so I don't know what he's going to say, although he has been fairly public about saying that someone at the federal level needs to have a bigger role over spot crypto exchanges.
Mm-hmm. In your personal opinion, how do you feel it should be regulated among the SEC, Congress, how those lines should be divided?
Well, I certainly think it's good that Congress is focusing on crypto and thinking about what the proper regulatory regime is. I think it's important for that to be a decision that's made by people who are accountable to the American people. I would urge people who are thinking about the proper regulatory framework not to assume that everything needs to be highly regulated in the financial system. If a system of self-regulation is working, then I don't see that we need to create a whole new framework. But we do need to think about what the interactions are with our existing regulatory framework. And that's something that I've been urging us to do now for 3 years. I'm hoping that under Chair Gensler we'll be able to do that.
Well, there are some policymakers who have a view that there should be more regulatory action or clarity in the matter. Senator Warren, Sherrod Brown had some comments from committee hearings yesterday. We have a recap. Let's have a listen.
Instead of leaving our system, our financial system, at the whims of giant banks, crypto puts the system at the whims of some shadowy, faceless group of super coders and miners, which doesn't sound better to me.
There's nothing democratic or transparent about a shady, diffuse network of online funny money. The best thing we can do to protect Americans' money is to adopt smart regulations that protect consumers, that protect investors, that separate the innovators from the extortionists.
Many people have raised legitimate issues about cryptocurrencies, but we shouldn't lose sight of the tremendous potential benefits that distributed ledger technology offers.
Commissioner Peirce, would love to kind of get your reaction. Shady coders, but also some other balancing critique as well.
Look, well, I think it's important that Congress is trying to get their arms around what crypto is and what its benefits are and what the potential risks are. That's a natural function for the Banking Committee to be playing. What I do urge caution on is there's a real importance in having the ability of people to code and express themselves through software. We want to make sure that we don't end up preventing people from doing that without having to fit into some regulatory oversight regime that would prevent them from engaging in what is essentially free speech from my perspective. So I think that's an area where all of us are going to be challenged as regulators in thinking about how to regulate while making sure that we preserve the important fundamental American values of innovation and privacy and the ability of people to express themselves, even doing so through code. So that's something that I'm concentrating on as I look at it from my regulatory perspective.
Commissioner Peirce, it's so nice to have you back on the show. So, I mean, one of the things we did see from the hearings yesterday is there definitely is a little bit of, I don't know if I would say panic, but I think maybe concern over cryptocurrency. And I think part of the reason for that is concern recently over stablecoins, in particular Tether or USDT. So I would just love to get your personal opinion. How much should we be worried about Tether or about stablecoins in general? Because we're definitely seeing a lot of people talking about them not being properly backed or not being transparent enough, and how this could lead to, a financial crisis in the cryptocurrency world and potentially even in the larger financial world. Is that a legitimate concern?
Well, I can't speak about any particular stablecoin. I think there has been a trend in recent weeks and months to provide some more clarity and transparency, and that is kind of one of the fundamental baselines of crypto, I think, which is transparency and openness so that people know what they're getting and they understand the terms on which they're getting it. So that's a natural change. Certainly I understand why people are asking questions. Stablecoins have grown quite a bit in a relatively short amount of time. Now, I think it's interesting that at the same time that the Senate was having a hearing, the House was having a hearing on CBDCs. And I've made the point in the past that I think private stable coins might be a better fit for some of the things we're trying to achieve or that other countries are trying to achieve with the CBDC. I think a stable coin could provide that role in the United States. So let's be careful, again, not to allow panic to prevent us from seeing some of the benefits that these stable coins are playing now and can potentially play. And of course, we have to ask questions and understand how they work. That's a natural and understandable thing for market participants to be doing, and certainly for regulators and members of Congress to be doing as well.
Commissioner Peirce, welcome back. Do you think stable coins, though, that are backed by securities rather than dollar and dollar-like assets, do you think that they themselves are securities? You personally, not the SEC, but what do you think? Do you think they basically are?
I certainly speak only for myself, but I would say that if people are designing a stable coin, they need to be asking that question that you're raising, which is an important one. Is this a security? Because if it is, then there are a whole raft of rules that already apply. And so what it is, what the underlier is important. And that's something that people need to be looking at as they're designing these things.
Along the same lines, if a stable coin is issued against non-dollar denominated assets directly, so in other words, they're not taking in dollars to issue those stable coins, but foreign assets, foreign currency, or say commercial paper, does the SEC view that as a form of essentially printing money? And what's to stop a stablecoin issuer from doing that to the tune of trillions of dollars, effectively making its own currency pegged to the US dollar, but separate.
Well, I think some of the concerns that you're raising in that question are probably better addressed to the Fed or Treasury as they think about stablecoins. And there certainly is a lot of consideration of stablecoins from different angles in the government. From our perspective as a securities regulator, what we're thinking about is, are these things, as they're designed, securities? And if so, how are we thinking about regulating them? How are they already regulated under our existing regime? I think it's from my perspective also, I want to make sure that we think about these things as the role that they can play in fostering the development of our financial system for the benefit of everyone.
Commissioner Peirce, you mentioned central bank digital currencies. In your ideal scenario, would we have central bank digital currencies like a digital dollar and stablecoins coexisting, or are you suggesting that stablecoins could actually play that role better?
Well, I think we need to be talking about that as a society and asking whether in the U.S. would a private stablecoin system be preferable, particularly because we have such concern about privacy in the United States. And the notion of having a CBDC, I know that some people, including former chairman of the CFTC, John Carlo, think that they can be designed in a way that respects privacy. But that, for me, is a very important value that we have to make sure is front and center. And private stablecoins are already functioning and can function in a way to preserve people's privacy in their financial transactions. So something to consider. Again, it's a little outside my purview as a securities regulator, but I just think that sometimes when we approach these conversations about financial technology, we do so from the perspective of wanting to have much more regulatory oversight, much more government oversight of financial transactions. And I like to push back and say, remember that the baseline should be allowing people to enter into transactions they want to enter into as private citizens with one another, as long as they have full information about what they're getting into, and allow them to engage in transactions without having a government monitoring role, unless it's necessary for achieving a particular government purpose.
So in your gut, what would you prefer? What would the world look like? Would it be a world of stablecoins, or would it be a world of CBDCs, or a mix? What do you personally, what's your personal preference?
Again, I mean, my personal preference is just that we as a society have a really broad-ranging discussion about this and don't just jump to the conclusion that we need to be surveilling every financial transaction. That's been a concern of mine at the SEC. There's a strange willingness to cede personal privacy when it comes to financial transactions. And I think that's something that we need to really talk about as a society before we go down that road. And to the extent that CBDCs would play a role in that, it's a piece of the conversation we need to have.
All right. Commissioner Peirce, we'll wrap it there, but always a pleasure having you on this show. Thank you very much for weighing in on stablecoins and the continuing evolution of the digital asset space.
Thank you so much for having me.
That was SEC Commissioner Hester Peirce. Coming up, checking in on Asia and a crypto markets update with crypto accounting software firm Wave Financial. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 28th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, China's Bitmain spins off Bitcoin mining pool Antpool. Indian banks invest in blockchain technology, and Binance CEO Changpeng Zhao confirms he's willing to step down. Let's get you up to speed from Asia to the world. First up, there's been another big move from a Chinese crypto miner. Mining hardware giant Bitmain has spun off its Bitcoin mining pool, Antpool. Now, it's a significant chunk of the Bitcoin mining pie to give up. According to data from blockchain.com, Antpool is currently responsible for about 1/5 of the global hash rate. Bitmain gave no reason for divesting Antpool, but a source familiar with the matter told Forecast News that it could be related to a desire to list the company in the U.S. Bitmain tried once in 2019, but at that time, the SEC questioned the financial treatment of its mining pool business. In a blog post, Bitmain said that following the divestment, Antpool will operate independently once it obtains the support of new shareholders. Bitmain says it will now focus on development and sales of mining hardware alone. Over in India, while the banking industry remains cautious still over crypto, it's accelerating its interest in blockchain. According to regulatory filings to the National Stock Exchange of India, 15 of the country's biggest banks have invested in IBBIC, or Indian Bank's blockchain infrastructure company. They include the country's 3 biggest private lenders, HDFC Bank, ICICI Bank, and Axis Bank. And they have almost $500 billion US, or $500 billion US worth of assets between them. What will the company actually focus on? Well, India is a large country that's still reliant on paper fiat. As you can imagine, it's cumbersome and slow. IBBIC plans to use blockchain technology for processing inland letters of credit to quicken transactions and eliminate risks of fraud, major causes of concern in India's paper-reliant financial sector. With discussion over legislation that could ban crypto still in India altogether currently stalled, embracing blockchain may be the way forward for India's digital economy. And on to the markets now. Bitcoin has rebounded, gaining 7.5% to hover very close to the significant $40,000 US mark as of 4 p.m. local Hong Kong time today. This on a day of market uncertainty over China and Xi Jinping's regulatory hammer on education and tech sectors. A lot of investors seeking safe havens today during the Asian trading day. And in the top 10 for cryptocurrencies, Polkadot up 7%, Ripple up almost 15% after announcements that it will partner up with SBI Remit in Japan and Coins.ph in the Philippines to use XRP for remittances between the two countries. You can read more on that story on forecast.news. And following our story last week, the CEO of Binance has reiterated that he is willing to step down. Speaking at an SCB 10X DeFi Summit on Friday, we noted that Changpeng Zhao, or CZ, said the changing regulatory environment means businesses in the crypto industry need to pivot from being technology startups to being financial services companies. He explained that his skills as a tech guy means that he may not be the best person to lead the company in future.
I'm actually looking for a senior person with strong compliance background, with strong regulatory background to lead the entire organization, maybe become the new Binance CEO.
A press conference and series of tweets on Tuesday saw CZ reconfirming those comments, saying that while he isn't set to step down immediately or leave Binance, replacing CEOs can be good for business. As pressure mounts from regulatory actions in a number of jurisdictions from the UK to Japan, CZ also said that the company is ready to work with regulators around the world in order to protect consumers. So the CEO succession plan at Binance begins. Let's see if Binance will find external talent or raise up from the inside. We shall see. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Let's have a live look at Bitcoin. The CoinDesk Bitcoin Price XBX Index currently trading at $39,700, now $810. Bitcoin is up about 3.8% over the past 24 hours, and the CoinDesk Ether Price ETX Index at 2291. ETH slightly down almost 0.3%. And the new DFX CoinDesk's DeFi index is trading at 493. DeFi is slightly up about 0.1% over the past day. All right, and joining us now to discuss the crypto markets is Henry Elder, head of Treasury Wealth and Wealth Management at wealth management firm Wave Financial. Welcome to the show, Henry. So we did see Bitcoin rise above 40,000 earlier. It seems to have fallen below that resistance level. But where do you see Bitcoin going, and what is the catalyst to this bounce that we've seen over the past couple of days?
Absolutely, Christine, and thank you so much for having me on the show. It's great to be here. So, what we're really seeing right now is regulatory season. Over the past couple of days, we saw as leverage liquidations basically cascaded upwards. The market got a little bit too bearish and saw an opportunity to wipe out the leverage shorts, which pushed us above $40,000 Bitcoin for a short amount of time. And then I think the reality of the situation that the crypto markets are facing from regulators worldwide kicked in and has caused us to sort of cap out at that $40,000 level. I think it was great that you guys had, a focus on regulators today, because that's what's really driving the markets. As we see action in the US and internationally, I think a lot of people are wondering, how is this going to impact a lot of the important themes that we've seen driving the market this year, especially when it comes to stablecoins and DeFi.
So, Henry, we noticed that Bitcoin is higher than relatively some of the other assets that are in the market, such as the alts and DeFi. And usually, when if Bitcoin is higher on an up day compared to other alts, it's a signal that something's going on. Is this a flight to safety away from the likes of stablecoins? Is that in general what you think is going on here? That basically traders are saying, hey, you know what? If I got to get my money out somehow to fiat or to whatever, I probably have a better chance doing it in Bitcoin than even some of the major stable coins.
I think that could potentially be it. A lot of these regulatory fears are weighing on stablecoins specifically. Tether is, it's something that has been subject to quite a bit of fear, uncertainty, and doubt for years now. But I'm sure that you saw the news of rumors earlier this week that the Department of Justice was potentially shaping up to take action against Tether. So, we've actually been seeing in the markets some demand for puts against Tether and traders putting on positions that could profit in the case that Tether comes under regulatory attack and loses its peg. So in a situation like that, absolutely, Bitcoin serves as the safe haven asset for crypto markets.
Good morning, Henry. There's obviously a lot going on in the world right now, fears of COVID, resurgence. What are you seeing in terms of correlations between the cryptocurrency market and the stock market, and how are you looking at that going forward?
Yeah, Emily, that's a great question. While we were in what was affectionately called crab season, as Bitcoin sort of just moved sideways and Ethereum moved sideways, we started to see those increasing correlations between crypto and traditional capital markets. But that correlation, very much broke over the last couple of days. However, if we do find that we move back into a sort of sideways motion as traders try to figure out the impact of all of this regulatory action, I think we could start to see those correlations start to rise again.
So, Henry,
I'm wondering
one of the big themes.
Go ahead, Lawrence.
Oh. Okay. Well, one of the big themes, delays are pretty funny. One of the big themes of the previous few months, definitely in Q1, was this idea of institutional interest in Bitcoin. Has that subsided? Has it, because of the regulatory factor now with stablecoins, have institutions just said, you know what, this isn't for us, or let's just wait and see, let's hold off?
Yeah, that's the $1 trillion question, Lawrence, isn't it? I absolutely do not think that we've seen the end of institutional interest. In fact, I think that the drawdown in May that basically reset crypto prices allowed them to re-enter the market at an attractive price range. You have to remember that institutions take a longer-term view of the market than your typical crypto trader. And they're looking at this as a 5, 10, 15, 20-year investment, right? And they see the power of this technology. They recognize that the reason that we're dealing with regulators right now is because that power is being realized. It's validation of the thesis that crypto technology, blockchain technology will underpin future financial markets and far more than simply financial markets. So the reset in crypto prices allowed most of them to enter at a much more attractive price than they would have a few months back. And these are not, I think it's easy when you're operating in the crypto markets to get caught up in the sort of bear bull mindset of many of your retail and even some of the more professional traders. But when you're talking about institutional asset allocators, it's very simple, right? I mean, when they see that an asset is going up in price for a significant amount of time, the natural inclination is to believe that that asset is going to correct soon. And so Bitcoin going from $10,000 in late 2020 to $65,000 in the first quarter of 2021, that's not an asset that institutions are going to pile into at the peak. They're going to be looking at that. They're going to say, look, we've seen this kind of a thing before. We're going to wait a little bit and wait for it to connect, and then we'll jump back in. And that comes from that longer term mindset that they have. They don't need to make those returns in 60 days or 6 months. They're looking at a much longer time frame.
All right, Henry, we'll wrap it up there. Thank you so much for your insights on the crypto markets.
Thank you. It was a pleasure.
That was Wave Financial Head of Treasury and Wealth Management, Henry Elder. Coming up, how Italian soccer club AS Roma is going crypto, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So the Fed is having a meeting, and a statement is due out at 2 p.m. What are people watching for as this announcement comes out?
Yeah, so we're not expecting, I think, too much today just yet, but obviously, we've got kind of two competing issues here. The first one, of course, being inflation being somewhat higher and faster than expected, but also, the resurgence of the Delta variant of COVID within the U.S. Just yesterday, the CDC recommended that vaccinated people wear masks indoors again. Might prolong the crisis that the Fed's been watching for. So that's really the balance that we're looking at, and it's unclear so far, just where exactly the Fed's going to land, whether they're going to, start tapering off some of the relief programs they've instituted, or if they're going to try and maintain this and continue, their statement and their view that the inflation that we were seeing is, temporary.
Nick, there were 3 hearings yesterday. What's the TLDR? What was your main takeaway?
Yeah, so I think if I had to pick a high-level takeaway for all 3, it's that, lawmakers are definitely, they've been paying attention for a while, but we're now seeing, in concrete way that lawmakers are paying really close attention to this. They have concerns about how crypto is being used in, illicit activities such as ransomware, money laundering. We're seeing concerns about the impact on the, economy and the financial system. We're seeing concerns about consumer protection. But a lot of these hearings in the past where you might have, witnesses who are a little bit adjacent to the industry, we're now seeing a lot more witnesses who are directly from the crypto industry. So, they're asking questions to experts who are very familiar with the crypto and blockchain industries, which I think that's overall a good sign. Understanding is kind of the key to all this. And, Congress, the lawmakers might have views about crypto that they're trying to either, refute or verify, but they're at least asking a lot of the right people, these questions rather than, reaching out to folks who, don't spend a lot of time within the crypto industry.
Hey, Nick, are we seeing a breakdown according to partisan lines when it comes to how the questioning is going in all these hearings? Are we starting to see some sort of partisan divide in crypto as well?
Not really. You can make the argument in some places that, some Democratic lawmakers might be a lot more skeptical about crypto than their Republican counterparts. But for the most part, a lot of this is not partisan. You have lawmakers on both sides of the aisle who are, either pro crypto or at least, interested in where it could lead. A lot of the divide may be more, I want to phrase this carefully, but age, basically. A lot of younger lawmakers are more, pro crypto or at least more, neutral on crypto, whereas some of the more aged lawmakers might be a little bit more skeptical. But yesterday we did see bipartisan
concern. Would be
concern.
happy to hear he's young.
Exception that proves the rule. These are generalizations. I'm not saying every lawmaker fits into one of these buckets, but that's kind of where a lot of the divide has been. It's just it's not necessarily a partisan issue. Yesterday we saw lawmakers on both sides of the aisle, in the ransomware hearing, for example, complaining that crypto is being used to fund ransomware attacks. So that it's not an either or issue.
Certainly. No, there are a lot of crypto boomers out there, but interesting analysis no less. Nick, thanks for joining us.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Italian soccer club AS Roma has signed a 3-year partnership worth 36 million euros or $42 million worth with blockchain fintech Zytara Labs. Soon the team's famous yellow and red shirts will bear the branding of the Digital Bits blockchain, whose Digital Bits Foundation is supporting the partnership. And joining us now is Al Bergio, founder of Digital Bits. Welcome to the show, Al. So I'd love to hear your explanation of what this partnership is all about.
Well, thank you for having me. This partnership, what's customarily seen with sports organizations are sponsorship deals. And this is definitely much more than that. It's actually a product-focused partnership. It is a 3-year, 36 million euro partnership. I'm also the founder of both Zytara and Digital Bits, and it's really iconic to see such an amazing thing happen in a very iconic city.
Well, how did it come about, and what do you think about associating a storied soccer team like AS Roma with the crypto world?
Well, we saw the organization, the AS Roma organization, late last year come under new ownership, a very innovative owner at that. And that has transcended across the entire organization. I mean, they're fully embracing blockchain across the organization. It's really a remarkable organization for us to be collaborating with.
I see they have NFT playing cards and they're bringing AS Roma to the metaverse. Explain exactly what that entails.
Well, the center of it all is the theme of blockchain-based digital assets, for which NFTs play a role in, but also other forms of digital assets. To really commemorate this partnership, tomorrow the organization will be unveiling first ever a commemorative ring, jerseys that have been worn by players that have never been made available to the public. And the only way to purchase these items, limited edition items, is actually with the XTB token. So they're very focused on all things blockchain based with this partnership. And we're just getting started. This is truly a remarkable, transformative partnership that the sports world has really yet to see.
So, Al, is this a distraction from the sport itself? All these extra doodads and things like that, NFTs and what have you, do you feel that is it potentially taking away from the experience of the game itself? Is it adding to it? And also, what did the players get out of this? I mean, did the players get a cut of, let's say, NFTs being sold, or is it going directly to the teams and the team owners?
I mean, at the end of it all, it's with the fan front and center. The partnership is also very focused on fan engagement. You have stadiums that have capacities in excess of 70,000 people, and the focus here is to not just have blockchain and digital assets play a role off the field, but also in stadium, and really stimulate sort of the next generation of fan engagement. So I would say it's not in any way really a distraction from the sport itself. It's actually bringing it into the sports, capturing iconic moments, and being able to share that with the fan base at large, which, I mean, frankly, spends into the hundreds of millions in various countries around the world.
Oh, I believe Emily is frozen out there. But just following up on Lawrence's question, Al, who is getting the money? Are players getting the money? Is it going to teams? Is it going to team owners?
So it really, I guess it depends on when you say money, what we're specifically referring to. Our partnership is with the AS Roma club organization. We do fully, we have not necessarily publicly unveiled which of players, the set of players that we'll be working with initially, but the focus is really to be all-inclusive, not just with the current organization, but to really bring back and leverage the 94-year history of this organization and all the legends that have really touched their field. So it is not a focus to simply benefit the club as a whole, but really the fans and all key stakeholders, and that includes the players.
All right. Al, thanks for joining us, and congratulations on this new endeavor. Looking forward to seeing the soccer world embrace crypto.
Thank you.
All right. That was Digital Bits founder Al Bergio. Time now to check in with Crypto Twitter with our tweet of the day. And this one coming from fellow Canadian Garrett DeVink, tech reporter for the Washington Post, tweeting, "I am hearing that Microsoft CEO Satya Nadella voiced the words enterprise metaverse on the call today. Please make it stop." So is Microsoft trolling the virtual world? Apparently, you're cool if you put it in your pitch deck in 2021. Lawrence loves NFTs. All right, that's it for First
awesome.
Mover. Thank you, Emily Parker. Yes. Thank you, Emily Parker.
Really?
Thank you, Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.